According to a survey, Apple, Google, and Amazon are among the most valuable brands in the world in 2022. Thus, Apple, which now ranks first in the Kantar BrandZ Most Valuable Global Brands 2022, is on its way to becoming the first trillion-dollar brand. The brand's worth hit $947.1 billion. Apple distinguishes itself with its high level of diversity and ongoing diversification of its hardware, software, and services portfolio. Google is the corporation that comes in second and is one of the fastest rising valuable brands in the rankings. The IT titan increased the worth of its brand by 79% to $819.6 billion. Google's collection of office work and productivity tools has made it an indispensable part of customers' lives all around the world. The aggregate value of the top 100 valuable brands in the world has climbed by 23% in the last year, to $8.7 trillion. This year, 37 brands have improved their rankings. More than three-quarters of brand value will be generated by U.S. corporations by 2022. Media and entertainment, business solution providers, technology, and retail brands account for more than half of the top 100 valuable brands of total value. But the real question is, what are the top most valuable brands in the world? This video will uncover the top most valuable brands worldwide, brands with the fastest growth, and a wide range information you should know around these topics. Without further ado, the following is a list of the top 10 most valuable brands across the globe in 2022. 1. Apple. 2. Amazon. 3. Google. 4. Microsoft. 5. Tencent. 6. McDonald's. 7. Visa. 8. Facebook. 9. Alibaba. 10. Louis Vuitton. Before we move any further though, let's look at the top 3 valuable brands in the world in 2022. In the first spot is Apple. Apple maintains its lead with a record valuation. The brand has kept its title as the most valuable brand in the world with a 35% increase to $355.1 billion, the highest brand value ever recorded in the Brand Finance Global 500 list. Apple had a spectacular 2021, capped off by becoming the first business to reach a market worth of $3 trillion at the start of 2022. In the past, the company's success came from focusing on its core brand positioning. However, its recent rise can be attributed to the fact that the company now realizes that its brand can be applied to a much wider range of services. The iPhone continues to account for around half of the brand's sales. This year, however, Apple focused more on its other products, including a new generation of iPads, a revamp of the iMac, and the debut of AirTags. Its suite of services, which includes everything from Apple Pay to Apple TV, has grown in importance to the brand's success. Furthermore, Apple understands the value of staying in touch with its customers in order to sustain brand equity. Privacy and the environment are important issues, and Apple has demonstrated its commitment to both. This is evident by increased transparency in the App Store's privacy policy, which reinforces customers' trust in the brand, and the statement that more of Apple's manufacturing partners would switch to 100% renewable energy as the business strives to achieve carbon neutrality by 2030. Apple has incredible brand loyalty, owing largely to its reputation for quality and innovation. Decades of hard labor have resulted in Apple becoming a cultural phenomenon, allowing it to not only compete, but thrive in a wide variety of markets. With rumors going around that it will move into electric cars and virtual reality, it seems ready for a new jump. Now let's take a look at a list of the top valuable brands with the fastest growth in 2022. The first brand on this list is TikTok. TikTok is the fastest growing brand in the world in 2022, driving the media revolution. TikTok is the world's fastest growing brand, with its brand value tripling in the last year. The entertainment app's brand worth has soared by an amazing 215%, from $18.7 billion in 2021 to $59.0 billion this year. It is the highest new entrant to the brand Finance Global 500222 list, ranking 18th among the world's top 500 most valuable brands. Furthermore, with COVID-19 limits in place around the world until 2021, digital entertainment, social media, and streaming services experienced steady expansion, and TikTok's popularity demonstrates how media consumption is changing. The app became more popular because it had easy-to-understand and funny content. It was also a way for people to express their creativity and connect during the lockdown. Simultaneously, smart collaborations, such as TikTok's sponsorship of the UEFA Euro 2020 tournament, exposed TikTok to demographics other than its original Gen Z audience. In 2021, it surpassed 1 billion users and became the top downloaded app on both Android's Google Play Store and Apple's App Store. Throughout the COVID-19 epidemic, media consumption has increased, but the way we consume it has irreversibly changed. To compete in this changing industry, media companies have made significant investments in their brands, from content acquisition to user experience. TikTok's spectacular rise is proof that the brand has gone from relative obscurity to international acclaim in a matter of years, and shows no signs of slowing down. And the second on this list is Snapchat. Overall, media brands account for 3 of the top 3 fastest-growing valuable brands in the world in the ranking, with Snapchat brand value up 184% to $6.6 billion, and South Korean internet brand Kakao brand value up 161% to $4.7 billion, trailing TikTok. Snapchat's daily usage and income climbed by 77% in the first 9 months of 2021, thanks to the popularity of its short-form video feature, Spotlight. Other notable performers in the media sector include those that provide streaming services, such as Disney, up 11% to $57.0 billion in brand value, Netflix up 18% to $29.4 billion in brand value, YouTube up 38% to $23.9 billion in brand value, and Spotify up 13% to $6.3 billion in brand value. Traditional media brands, on the other hand, have experienced a steady decrease, with people increasingly preferring social media platforms and on-demand streaming in their place. This year, Warner Bros. Is one of the fastest-falling brands in the ranking, brand value down 33% to $6.8 billion, and this tendency is much more pronounced when compared to pre-pandemic valuations. Looking at brand value change over the previous 2 years of COVID-19, 3 media brands are among the 5 fastest-falling brands, with Warner Bros. Losing 40% of its brand value, NBC a brand value $9.4 billion, losing 38%, and CBS a brand value $7.4 billion, losing 36%. This next session covers the most valuable industries for brands in 2022. Topping the list is the tech industry. Technology is still the most valuable industry in the world in 2022. With a total brand value of about $1.3 trillion, the technology industry is once again the most valuable in the brand Finance Global 500 ranking. In the modern world, tech brands have become more valuable, and the COVID-19 pandemic has made this trend even worse. The list includes 50 tech brands. Nevertheless, the brand value is mostly attributed to 3 major firms, with Apple, Microsoft, brand value of $184.2 billion, and Samsung Group, a brand value of $107.3 billion, accounting for more than half of the overall brand value in the sector. Following a 29% increase to $71.2 billion, Huawei reclaimed its place among the top 10 most valuable brands in the world. The US sanctions had a significant impact on Huawei's smartphone industry, but the company responded positively by significantly increasing investment in both domestic technology businesses and R&D, as well as shifting its focus to cloud services. The IT industry is also home to two of the 5 fastest-growing valuable brands in the ranking, with semiconductor brands AMD up 122% to $6.0 billion in brand value, and Nvidia up 100% to $16.0 billion in brand value, also seeing significant growth. Because of the growth of gaming, cryptocurrency mining, and artificial intelligence, as well as a shortage of chips around the world, demand for both brands' products stayed high all year, which led to more sales. Following the tech industry is the retail industry. The retail industry is now the second most valuable on the Brand Finance Global 500 list. For the first time, it has passed the $1 trillion mark. Prior to the pandemic, retail was the third most valuable sector, trailing only banking, but an increase in e-commerce has seen it edge ahead, while banking has stayed static. Retail was the fastest-growing large industry in the Brand Finance Global 500 ranking during the pandemic, with a 46% increase in brand value, beating the IT and media sectors, which rose by 42% and 33%, respectively. This year, Walmart, one of the sector's top performers, continues to enjoy brand value growth and return to its spot in the top 5, jumping from 6th to 5th place thanks to a 20% increase in brand value to $111.9 billion. Walmart already had a strong physical presence, and it invested in its e-commerce capabilities at the onset of the pandemic, which has paid off. It used more technology to pick and pack customers' online grocery orders, because it expected that people would still want to pick up and have their groceries delivered after the pandemic. Retail also had the newest entrants in the valuable brands ranking this year, with 9 brands, accounting for nearly 1/4 of all new entrants. The majority of the new retail brands are supermarkets, many of which have adapted to the new normal by increasing their accessibility through online shopping and click and collect. The highest ranked of the 9 is Germany's Edeka, which enters the ranking at 340th place, with a brand worth $6.5 billion. The initial perception of the lockdown was that retail would suffer, but those who have demonstrated the agility to adapt and use technology have impressed with strong gains. The industry's change to meet the changing needs of its clients has sown the seeds of both short-term and long-term prosperity. Home Depot, the third largest retail brand behind Amazon and Walmart, performed well throughout the COVID-19 epidemic and continued to show positive brand value growth this year, up 6% to $56.3 billion. When COVID-19 limits were implemented, the brand's revenue increased as individuals spent more on home remodeling. But as the economy got better and restrictions were lifted, Home Depot's sales growth slowed in 2021. This suggests that this pattern is unlikely to continue. Despite the sector's general prosperity, retail is home to the ranking's fastest-falling brand. Alibaba.com defied the trend, reducing its brand value by 42% to $22.8 billion. People said that the brand abused its market dominance by not letting merchants use other e-commerce sites. Later, regulatory changes opened it up to more competition, which slowed its growth and led to its financial collapse. Next is the pharmaceutical industry. Pharma brands are experiencing good growth. Pharma brands have been in the spotlight since the outbreak began, as the world has turned to the industry for COVID-19 tests and vaccines. As a result, predictably, the industry has grown faster than any other in the Brand Finance Global 500 during the last 2 years. The number of pharmaceutical brands in the ranking has more than doubled, from 4 to 8, with brand value growing by 94% to $54.0 billion. All 8 featured brands are more valuable than they were in 2020, with those producing COVID-19 immunizations enjoying the greatest rise. Johnson & Johnson is the most valuable, with a 24% increase in brand value to $13.4 billion. AstraZeneca, a new entrant to the ranking, gained the title of fastest growing industry, with a spectacular 77% increase in brand value to $5.6 billion, followed by Pfizer as the second fastest growing at 58%, boosting its brand worth to $6.3 billion. The development of effective vaccinations has been critical in reviving the world economy. This has led to higher profits and a better global reputation for pharmaceutical brands, which raises interesting questions about how they could be used in other industries. In the future, a significant brand shift in the sector is expected as a result of the trend of separating pharmaceutical and consumer health divisions, as Johnson & Johnson and GlaxoSmithKline have done. To keep the brand equity that has been built up in the merged business, it will be important to know the strengths and value of each part of the brand. The tourism industry ranks next on this list. Tourism brands are showing signs of improvement. The overall brand value of the tourism industry is still lower than pre-pandemic assessments, exacerbated by a drop in the number of brands featured in the Brand Finance Global 500 from 15 to 9. But all of the brands from the industry that are on this year's list have seen their brand value rise, which is a good sign that the economy is getting better. The hotel industry grew at the quickest rate, with Hilton up 58% to $12.0 billion, and Hyatt up 26% to $5.9 billion, becoming more valuable than they were before the pandemic. As lockdown requirements were relaxed, the sector benefited from an increase in staycations and leisure travel, as well as a limited return of business travel. At the same time, both companies have kept putting money into their brands. Hyatt just finished buying Apple Leisure Group, and Hilton will open 96 new hotels in the third quarter of 2022. Delta, $7.3 billion, American Airlines, $6.3 billion, United Airlines, $5.5 billion, Emirates, $5.0 billion, and newcomer Southwest Airlines, $4.9 billion, all saw increases in brand value as international and domestic travel increased, though none has yet recovered to pre-pandemic levels. The same may be said for online booking sites, like Booking.com, $8.7 billion, and vehicle rental company Enterprise, $7.1 billion. Despite sporadic restrictions in place around the world, the rebound in the tourism sector is an encouraging sign. Variant outbreaks definitely slowed down the recovery, but once the world gets used to living with COVID-19, there's no reason why tourism can't take off again. To conclude this video, let's take a look at the most valuable brands in the world by region. While Apple is the most valuable brand in the Americas, Coca-Cola is the most powerful, with a Brand Strength Index, BSI, score of 93.3 out of 100 and a corresponding elite AAA+ grade. The brand is also ranked second globally, after only the Chinese internet behemoth WeChat. While maintaining its well-known core product, the brand is investing in lower sugar variations, like Coke Zero, to meet evolving consumer demands. At the same time, Coca-Cola has made the strategic decision to embrace e-commerce to make sure that its brands are always available in an age when supply chains are often broken. At the height of the epidemic, a digital commercial campaign emphasizing life celebration and shared experiences, Together Tastes Better, was developed to promote the home consumption of Coca-Cola products. This has been made easier with the help of the MyCoke mobile app and digital wallet, which let people order and get Coca-Cola products delivered online. For the fourth year in a row, Corona, up 21% to $7.0 billion, is the most valuable brand in Latin America. The popular Mexican beer brand has made strides in its sustainability initiatives, with the goal of reaching a net zero plastic impact by 2021, since it now recovers more plastic from the environment than it generates. The brand has also added a non-alcoholic beer, and the first beer to contain vitamin D to its line of products. The pandemic's impacts on Corona, on the other hand, have not been negligible, as the brand's name's closeness to the coronavirus caused unfavorable connections at the start of the epidemic. After getting its reputation back in 2021, Corona has had trouble with its logistics, which means it will have to raise its prices in the coming year. Now, in Europe, two German brands compete for the highest brand value on the old continent. Automobile powerhouse Mercedes-Benz and telecommunications company Deutsche Telekom Mercedes-Benz is once again the most valuable brand in Europe. It is worth 60.7 billion euros, and Deutsche Telekom is close behind, worth 60.1 billion euros. Sales in the automotive industry fell as a result of pandemic-induced demand drops and supply chain difficulties. However, as the year proceeded, brands were able to improve their performance through fresh releases and partnerships. Mercedes-Benz will unveil the sixth generation of the C-Class series with a new interior design in 2021, as well as automated driving technologies. Simultaneously, an industry-wide movement toward electric vehicles and a more sustainable approach to production and distribution is growing. Mercedes-Benz confirmed that sales of electric vehicles increased by 90% this year. In 2021, Deutsche Telekom linked 1.2 million additional households to fiber-to-the-home (FTTH) networks, with another 2 million planned for 2022. The emphasis is on establishing strong optical fiber links in underserved areas. The telecommunications giant is also putting money into digital technologies like Signal Wire, which specializes in software telecommunications infrastructure that combines video, voice, and messaging into a single platform, and Polkadot, a public blockchain framework made by the co-founder of the cryptocurrency Ethereum. Spur, with a BSI score of 92.3 out of 100 and an accompanying AAA+ rating, is Europe's strongest brand. This year, Spur's brand strength has grown by plus 0.3, making it stronger than Ferrari for the first time, while the Italian car company's strength has dropped by minus 3.0. On its mobile application, the Russian banking and technology behemoth has just released new digital investor services, such as portfolio selection and investment advice. Simultaneously, Spur is expanding its digital ecosystem to include services other than banking, such as e-commerce and logistics, as well as telehealth and streaming. Spur wants to expand into a new group of Gen Z users with a new entertainment and gaming service, even though it already has an impressive 100 million customers. In Africa and the Middle East, Aramco, the region's most valuable brand, has been crowned once again with a brand value of $43.6 billion, a 16% year-on-year rise. After a rough time for the industry at the start of the COVID-19 pandemic, oil prices went up in 2021. This was helped by the problem with natural gas, which made businesses turn to crude oil. Aramco's third-quarter profits more than tripled year-on-year, helping to drive its market valuation above $2 trillion. Aramco revealed plans to boost its production capacity from 12 million barrels per day to 13 million by 2027, indicating confidence and a desire for continued expansion. Through a global campaign and investments in sports like Formula One and golf, the company has continued to put a lot of money into its brand to help it grow in both its core markets and new ones. The Abu Dhabi National Oil Company, ADNOC, a fellow oil and gas brand, achieved an even more astounding 19% brand value growth to $12.8 billion, the fastest among the top 10 oil and gas brands globally, allowing it to maintain its position as the region's second most valuable brand. ADNOC is one of only a few brands in its industry to have raised its BSI score by plus 2.0 points, which shows that investors and stakeholders around the world trust and respect it. Following an increase in its national reserves of 4 billion barrels of oil and 16 trillion cubic feet of natural gas, ADNOC announced a $5 billion increase in capital spending to $128 billion, as well as ambitions to expand its upstream and downstream portfolios. However, looking ahead, and in keeping with the UAE leadership's 2050 net zero plan, ADNOC is also maintaining its commitment to energy transformation. In addition to working with TAQA and Mubadala on a renewable energy project, it said it wants to start a blue ammonia project. For the second year in a row, Etisalat is the region's strongest brand, with a score of 89.2 out of 100 and a AAA rating. Expo 2020 has provided Etisalat with the opportunity to demonstrate its position as a strategic enabler of the UAE's digital revolution. This opportunity assisted in raising its BSI score by plus 1.8 points, allowing it to break into the top 20 strongest brands in the world, gaining 18th place and making it the strongest telecoms brand in the world. In addition to its great BSI performance, Etisalat, which has the most valuable telecoms brand portfolio in the Middle East, increased its brand value from $8.5 billion to $10.1 billion this year, propelling it into the top 200 of the Brand Finance Global 500 ranking. STC, another telecoms brand, continues to rise this year, with its brand value increasing by 16% to $10.6 billion. STC has been the fastest growing brand in the region in the Brand Finance Global 500 over the course of the pandemic, with a 32% increase in brand value over the last 2 years, with its successful rebrand playing a key role. The brand's great results are due to its continued investment and diversification. This year, it said it would spend $400 million to build the region's biggest cloud-enabled data center, and one of Saudi Arabia's first digital banking licenses was given to its subsidiary STC Pay. As foreign brands continue to dominate on the continent, there are no African brands in the ranking. MTN is Africa's most valuable brand, valued at $4.0 billion, barely over $600 million short of the Brand Finance Global 500 threshold this year. In Asia Pacific, the brand value of South Korea-based Samsung Group is $107.3 billion in 2022, a 5% increase from last year, allowing it to preserve its long-held position as the most valuable brand in Asia Pacific, although falling to 6th in the global list, surpassed by Walmart. WeChat remains the region's and the world's most powerful brand. As a result of new product launches, Samsung's revenues have increased. Despite a global supply chain crisis and high demand for memory chips, the brand outperformed its high-revenue competitors in the chip manufacturing business. In addition, to accommodate consumer demand, Samsung is investing $17 billion in a new computer chip facility in Texas. The tech giant has also added more electronics, like new portable devices and equipment for the kitchen and home. Simultaneously, Samsung has established new measures to support global climate change efforts. Recently, the brand joined forces with Patagonia to help reduce the damage that microplastics do to the ocean. When it comes to specific subregions within Asia Pacific, Tata Group is the most valuable brand in South Asia, and India's only entry in the top 100, with a brand value of $23.9 billion, up 12% from the previous year. Tata Sons chairman Natarajan Chandrasekaran is also the best CEO in India and comes in at number 25 on the International Brand Guardianship Index 2022. As a result, Tata Group outperformed expectations in 2021 as a result of a slew of new acquisitions and alliances, as well as significant growth at key group companies ranging from Tata Consultancy Services to Tata Steel. In terms of market capitalization, the 20 listed companies that are part of the Tata Group have done better than India's 70 listed central public sector undertakings, CPSUs. Petronas, Malaysia's oil and gas brand, is the most valuable in Southeast Asia, with a brand value of $13.6 billion, 13% greater than the previous year. As the economy recovers from the effects of the epidemic, energy demand is going up. This means that Petronas can make up for the problems the oil and gas industry had in 2020. The brand is investing in clean and sustainable energy to broaden its offering and support long-term brand value growth. It recently bought Amplus Energy Solutions, which has important operations in solar energy throughout Asia and the Middle East, and its Petronas hydrogen branch will provide sustainable fuel for heating and mobility. By putting these and other sustainability plans into action, Petronas hopes to be carbon neutral by 2050. Woolworths has retained its position as the most valuable brand in Australia and the wider Oceania region for the third year in a row, following a 9% increase in brand value to $10.2 billion. Woolworths, Australia's largest grocery chain, has a 33% market share and has proved critical in keeping the supply system running during the pandemic. Over the last year, the brand has proven its ability to adapt to the changing retail landscape by extending its online capability to better serve its loyal consumer base. Over recent years, the brand's strong reputation, devoted customers, and lower risk enabled it to navigate any potentially negative consequences on its brand value created by Endeavour Group's demerger, of which Woolworths owned around 15%.